Hey guys, wanted to review a trade I had on Thursday. Sorry, I was going to say Friday, but actually on Thursday, right? In Exxon Mobil. Wanted to get that review to you guys. So we'll start off like we usually do. Let's start off with the market. So you guys can see on Thursday, this past Thursday, we were underneath the 21, right? And you can see we opened here on the futures and definitely had a rough day in the market. You can see the SPY was weak, open around 443, ended up down around 437, and you can see the Qs open up around 346, ended up around 338. So overall, right, market was not was not strong on Friday or on Thursday. NQ was weak, and YM actually was the strongest, right? But it still had some weakness there. So the thing you want to remember is, even though the market was weak, uh, whenever you're looking for stocks to trade, sometimes it's always good to look for a sector or a stock that is strong in the face of weakness. And so that's why I played XOM today. And this mainly has to deal with what's called sector rotation, right? Essentially, the majority of the money that's in the market stays in the market, right? It doesn't, leave the market and go to external accounts and it's transferred to like your bank account or whatever, right? Most of that money is held in the market by hedge funds and by mutual funds and the large companies that's buying billions of dollars of stocks and investments every single day. Well, what happens is when they make a certain profit in those sectors or in those stocks, that money is going to be rotated back to another sector or another set of stocks so they can reset and start making money with those sectors and those stocks. So the reason I say that is because if you look at these sectors, so if we're looking at the overall sectors here, um, look at all of our main sectors. So we've got semiconductors weak, tech's weak, healthcare is the strongest out of the main sectors, but it's still essentially weakest down near that 21. Communications is weak, consumer discretionary is weak, and finance is weak. So if you start looking through all the sectors, which sector looks pretty strong? Well, it's energy. Now, granted, energy is not going to carry the market, and consumer staples aren't going to carry the market, but these are the stronger sectors. But in this instance, I wanted to trade in energy stocks because as of late, we could see money going into energy stocks, XOM, CVX, these other energy stocks, right? So I traded XOM. You can see definitely money has been going into the energy sector. So that was kind of my focus. That was my focus on Friday. So if we look at XOM here, this was my setup. Essentially, XLE, so the energy sector, it had a resistance level of around $80. So if we go back to the XLE chart, and I'll just pull this chart up real quick, maximize it so you can get a feel for what I'm talking about. So we've got this kind of doji here that's around $80.12. So we were essentially looking for a break of that doji, of that $80 mark, and then we were looking for a push, right, up past $80. So if we go back to XOM, this is where things started coming into play. Now, on the top is the 5-minute chart. On the bottom is the 1-minute chart. Essentially, I've been waiting on this setup all week, just because energy had been strong. So if we're looking at the SPY here, I entered this trade, and this was 3 separate trades. I actually entered the first trade at 11:56 a.m. and then I exited at 12:03 p.m. So, you're looking at 1, 2, 3, 4, 5, 6. Collectively, right? You're looking at about a 6 to 7 minute trade. So this is how it worked. First thing I'm looking at, number one, I'm looking to see XLE breaking the key resistance level of that $80.12 and 21 cents or so I had marked. Um, the second level I'm looking at is XLE's in a squeeze. So it's in a 5 minute squeeze, and you guys know I like to trade squeezes. So it's in a 5 minute squeeze just below a key level. Third thing I was talking about, just like I said earlier, was sector rotation, and then the fourth thing that helped this was market strength. So if I put my crosshairs on 1156 right here, you can see where XOM was at on the 5 minute chart, as well as you can see where the SPY was at. So the SPY was essentially right here at 1156, looking to push back up. So that helped the market strength. And then you can see XLE. Essentially, when I entered this trade, it was breaking that $80 key resistance level, right? So I entered here at 1156. Essentially, my entry was there. Now, I was going to get out of the trade once it closed below that 5 MA, because like I said before, if the stock is strong, it should have hugged that 5 MA all the way up until it starts to consolidate, or it reverses. And once it reverses and closes below is then when I'm going to get out typically. So I ended up entering here on my first trade. I ended up getting out. I think a minute later. That first trade was a 22% return from here to here. And I know it doesn't seem like a lot, but essentially right here is when those premiums are asleep. And as you're breaking out, those premiums start to spike a lot. So you can literally make, like I said 20% return off of just one candle from here, from here up to there. Was a 20% return. My second trade was from 1157. So I re-entered right away to noon. So I entered here, and then I got out right as we were breaking there. That was a 8% return, and then I re-entered at 12:01. So I re-entered on the next candle, just kind of riding that wave up, and then exited right at 12:03. So essentially, what I like to look for on my trades are 10% returns, just because this is a small account that I'm growing. One of my accounts is small, and this is the small account that I'm growing here. So I exited each time for 10%, but obviously due to slippage, I didn't get that full 10%. I had a 2% slippage on the second trade and a 1% slippage on the last trade, but hey, it's all good. So collectively, from 1156 up to 1203, that was overall a 12% return on the day for trading XOM, 3 separate trades. So I was pretty happy with that. And you can see now it's breaking out of the squeeze for XLE. And the reason why I exited and completely got out of the trade is because you can see here, we started to essentially base right at that 5 minute level. And then I started seeing XLE dip below that 1 minute 5 MA. So, once I started kind of seeing it weaken a bit right up here, it hit a high. And then once it kind of hit its high, it started kind of basing right there. But I was out a little bit before that. So, wanted to get in and get out, get my 10% return, and I go from there. And that's why I got out, and then that's why I didn't re-enter, because I started seeing XLE to slow down a bit, and it started topping off on the 5 minutes. So I didn't think we were going to have any continuation out of it. Plus, if you look at the SPY, right where I exited at, now I started looking here, and then we started getting a bearish engulfing candle right here at that 12:07 mark, bearish engulfing candle. So essentially, that means we're going to have some type of reversal. And you can see here, we went down to the mid Bollinger Band on the 1 minute, came back up, and then continued back down. So that's what I got for my trade on XOM. If you do have any questions, you know what to do. Please hit your boy up. If you do like the content, please like and subscribe. Definitely trying to grow the channel. And if you do have any questions, like I said, you know what to do. Let me know. I'll review any stocks that you guys want me to review, and we'll go from there. So with that being said, hopefully you had a good trading week. Hopefully you mitigated risk. You took A+ setups, and you grew your account. And with that being said, You guys have a good weekend. Study up, get some rest up, and get ready for next week. Talk with you guys later.